I love Peter's negotiating here because he's like, okay, I'm going to give you even less money, but I'm going to take an even smaller portion of the company. So you're actually getting a bump in valuation from 2.7 pre all the way up to a glorious 3.8 million pre. So, a healthy increase in valuation. But more importantly, he understands that the negotiating here that is really going on is not about valuation. The negotiating that's going on is between whether or not Richard wants to sell and cash out today with a small win, which, let's be honest, like a small win of $4 million is not that small to most of us. So arguably like a pretty meaningful win for him. I mean, that's probably more money than he's ever thought he was going to have in one time. All right, thanks for joining me for another Silicon Valley React. If you love this show as much as I do, this is going to be a fun one. This is the one where Richard deals with multiple offers and sees the reality of FOMO and really good negotiating on behalf of investors in real time. Let's dive in.
This is Richard. It's Peter Gregory. No?
Come on, big head.
Yeah, I'm coming, man.
Okay, so right there, I love how he's like, oh, it's Peter Gregory. And the other, essentially the assistant to the other investor is like, oh crap, it's getting real. Go get the other investor quick. We might miss out on this deal.
Come on, big head.
Yeah, I'm coming, man. Slow. Why are you going that fast?
Because we got a meeting with Gavin Belson. Pick up the pace.
We honestly don't.
Okay, so this is interesting. So he is the original backer of Richard's company, Pied Piper, because he was part of his accelerator. So he's also like hurrying on in because he doesn't want to get cut out of the deal. He wants to make sure that he's represented. There's a saying in the industry that like if you're not at the table, you're on the table. And so he definitely wants to be at the table for this negotiation.
I'm actually outside of Gavin Belson's office right now, Mr. Gregory. Here he comes. So can I call you back in a second?
So, Richard Hendricks is here. There you are, Richard. So sorry these gentlemen have kept you waiting. So, here's the thing. I love what you did.
Really?
Fill him in, Jared.
Now, as you...
Clearly, this guy has like no clue what's going on. He is running completely on FOMO at this point.
As you know, Hooli is seen as possibly the most progressive company in the world. Part of that is Gavin's commitment to social justice, but part of it is his personal commitment to the people that work at Hooli. In that spirit, Gavin is prepared to give you a very substantial raise and a promotion to go with it.
I own 10%. He created it while living in my incubator. Ehrlich Bachman. This is big head.
I don't know what any of that means, but I'll give you $600,000 for it. We have the reach and the resources to take what you have done and push it to the global level.
That is a generous offer.
Shit, sorry. Well, really? No, that's yeah, no, here. It's Peter Gregory. Not sure how he got my number.
This is Richard.
I'll give you $3 million for it right now.
Okay, so clearly, like, he knows that Peter Gregory, who he's supposed to be playing as Peter Thiel, is like big deal in Silicon Valley, right? Early investor in Facebook. Before that, one of the founders of PayPal. Currently multi-billionaire based on all of his investments. Just a phenomenal investor. And so he's like, oh crap, I'm gonna lose this deal to Peter Gregory. I gotta like step up my game immediately. So he goes from like 600 grand to 3 million right away, trying to get this thing closed before Richard can make a decision. And what's crazy about this is this happens like this not quite this way where like he's on the phone and so forth, but like when the FOMO starts growing, you'll see investors kind of come out of the woodwork and start like throwing down valuations. This happened a lot in 2021 because there was this fund, Tiger Global, that really like kicked it all off. So Tiger Global would leverage Bain Consulting, which is, one of the top management consulting firms in the world. And they were paying them like incredible amounts of money. Like I think the number I heard was like $100 million to Bain. And then Bain, what they would do is they would go and they would look at all of these different startups in a particular sector, and they would pick out the one they thought was the winner, and they do a ton of diligence on them and really like be able to say like, hey, we think this is your best bet. And then they would provide that data to Tiger. Tiger would call up the CEO and they'd be like, hey, love what you're doing. I need to confirm a few numbers. Great, great, great. I will give you this valuation that's higher than anybody else will give you, and I will close in the next 2 weeks, and I won't take a board seat. So it's just like easy money that you don't have to spend months fundraising, et cetera, et cetera. And when there's a ton of FOMO, right, like this happens, right? So they would make that offer, and then other VCs would like hear about it, and they would like jump on board, and they'd be like, hey, we'll offer you the same thing or better or whatever it was. And so in 2021 was like a crazy year where valuations reached their all-time high, largely because these venture investors didn't have very much time to make decisions. They had to make decisions like on the fly because they didn't want to miss out. And that's the thing that's like interesting here is, and what these investors know is that there's only a handful of companies in any given year that matter. And as a venture investor, your job is to basically be in one of those few that matter. And it doesn't really matter if you get it wrong, like most of the time. As long as you, of all the deals you did in that year, you're in the one or the two or whatever it is that matter. Because if you are, you'll generate such a huge return, it'll offset all of the losses in the others. And so people will like fight tooth and nail, even on companies that ultimately fail, if that company they believe has a chance to be one of those that really matters for that given year. And I think you're seeing this dynamic play out in real time in this part of the episode.
Not sure how he got my number.
This is Richard.
I'll give you $3 million for it right now.
Gavin Belson just offered me $3 million for Pied Piper.
I'm prepared to give you $300,000.
Peter Gregory just offered me 300. Did you say 1,000?
For 10% of your company.
Okay, 4 million.
Okay, so there's like a little bit of a like, whoa, what happened? So he's offering him $300,000 for 10% of the company, which is the same valuation on a post-money basis. Really, he's not offering him the same valuation as what he's getting an acquisition offer at, because he's offering him $2.7 million, and then he's going to give him an extra, $300,000. So all things being equal, like Richard would be better off taking the cash offer if that's all he cared about was valuation. But what Peter offers him is the ability to maintain ownership in the company.
Okay, 4 million.
200,000 for 5%.
Huh? Yeah, you just went down.
No. You're still valued at $4 million, but you own 95% of a potential billion-dollar company. And not just that. I will help you build this company. I will introduce you to the people you need to know and provide the counsel that you need. I will take a small piece, but the company will belong to you, not Gavin Belson.
Okay, so I love Peter's negotiating here because he's like, okay, I'm going to give you even less money, but I'm going to take an even smaller portion of the company. So you're actually getting a bump in valuation from 2.7 pre all the way up to a glorious 3.8 million pre. So, a healthy increase in valuation. But more importantly, he understands that the negotiating here that is really going on is not about valuation. The negotiating that's going on is between whether or not Richard wants to sell and cash out today with a small win, which, let's be honest, like a small win of $4 million is not that small to most of us. So arguably like a pretty meaningful win for him. I mean, that's probably more money than he's ever thought he was going to have in one time. But choosing between that and building like a $1 billion company and owning a big chunk of that $1 billion company, being worth hundreds of millions of dollars and making a real run at it. And like a good salesperson, Peter then breaks it down and he's like, hey, I know you're probably worried that you don't know how to do this, but I do, and I will advise you. And you may not know how you're going to get customers, and I will help you with that. And the last piece is he knows that there's a good chance that this founder doesn't hold the other investor in very high regard. And so there's also at that very end, he's like, and then you will own it and not this other guy that you don't respect. And when it comes to like financing entrepreneurs, like don't discount how important that is. Who your partner is, but also who is going to be the champion of the thing that you built, your baby, going forward, right? And so I think like he's playing on all of these different areas that have nothing to do with money. And that's why I think it's just like such a masterful negotiating scene.
You have until tomorrow to decide.
And then he like gives him some time. He's like, hey, you have until tomorrow? So he puts like a firm deadline. So he's putting some pressure on him, but not so much pressure that he has to decide in the moment. So he's giving him time to think about it, which in its own way like is like, hey, I'm going to give you time to think about this, but not an unlimited amount of time. So it's like, I'm the partner you want to work with because I'm not going to put a ton of pressure on you. I'm going to be a good partner, unlike the other investor you're dealing with.
Okay.
Pull your head out of your ass, Richard. I'm offering you $4 million right now.
That is a lot of money. I actually I've got to go to the bathroom. I've got to pee. There's a desperate. I'm bursting. I'll be right back, but right now.
Okay, 10 million.
No. Maybe. I didn't mean to snap at you. I'll talk in a bit. Won't be long.
Here's the thing. We ultimately know, if you've watched the show, that he's going to accept Peter's offer. And it's clear that he probably would accept it, right? Because otherwise there wouldn't be much of a show to talk about, or no Pied Piper. Nonetheless, here's what I think is interesting about it, is that he's still pretty young in this show, right? And when you're young, my belief is you should take a lot of risk, generally speaking, because you have a long ways in your life, a lot of time in your life to make up for any losses. When you're older, you take less risk, right? Because you can't afford, getting wiped out when you're older and not having any money for retirement and so forth. But when you're young, you should take risk. Now you got to take smart risk, right? You're not going to just like go down to Vegas and put all of your money on black. That's not a smart risk. But maybe it's investing in startups. Maybe it's investing in real estate. Maybe it's, in his case, taking the deal where you forfeit $10 million, or in his case, he owns 90% of it, so $9 million, in exchange for the opportunity to chase your dreams, which I think is awesome. Anyways, what did you think of that whole negotiating scene? Who do you think, should he have taken the $10 million offer? What would you have done? Or would you have run with it and tried to build a bigger, more successful company? Anyways, if you enjoyed that, check out my other Silicon Valley React, where we see how Richard bungled up his elevator pitch. Thanks.